Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. All right. I know you all can tell by the title of this video that this video is about $1,500. No, okay. Sit back, grab some popcorn. Unlike my videos earlier this week that were, I think, mostly for members, they're like 5 or 7 minutes long to give them updates. This one's going to be for public consumption, so it's going to be a longer video. So both members, of course, can watch this. I hope that you do. It's important that you watch it because I know some people have some questions about some of the indicators in the service. Okay, and for the general public, for some that may be interested on, how did I make the $1,500? How did I go about doing that? All right, before we get started, if any time during this video you like what you're hearing, like what you're seeing, click the subscribe button below. Give me a thumbs up. Really appreciate it. There's also a join button down there. So if you like what you're hearing in this video and you want to become a member, it's a whole whopping $5.99 a month. I know money's tight, so that's about as cheap as it gets. All right, let's get started with the video. S&P 500 futures were just switched over on the TD Ameritrade platform, which is known as Thinkorswim, or TOS is what this trading platform is known as. The contracts have switch over to September, so we're looking at September contracts, okay? This is futures, guys and gals, okay? Futures, not options. We're looking at the S&P 500 futures. That's right. They're really what drives the market, not the SPX. Forget that. Okay, not the spider. That's not what drives the market. Forget that. It's the futures, guys. That's what drives the markets. Futures and commodities, okay? So these are the futures on the S&P 500. Okay, these happen to be the E-minis, but a little bit later in the video, yes, I'll show my profit or loss on a trade I made. Of course, in the video, it should be obvious I already made $1,500, but I did that on the E-micro future contracts, okay? So MES, obviously the M stands for micro, okay? Let's take a look at this. I think it was yesterday or last night or the day before, I told my members, stock market's going to go down. Stock market's going to go down. Now, how did I know that? Some people might say, wow, that was obvious it was going to go down. Maybe for some veteran traders, they already know the answers. They're making buku bucks. They're trading whatever often, and they don't need this video. If that's you, hey, no problem. There's plenty of other videos you can go watch, whatever. Okay? For those that want to know, let's talk about all the things I did and all the ways that I determined to place this trade when I did. Okay? So first of all, on a long-term basis, we can see the market's going down, right? I mean, even if we didn't have this channel drawn here like I have drawn, okay, and I have an approximation what I think the market's going to do, okay, even if I didn't have all that, you can still tell the market is going down. If you look at this is a daily chart, if you look at the monthly or weekly chart, you're going to see the same thing. The market's going down. In fact, we're in a bear market. That's supposed to be it too. Yes, we hit 20%, which is generally considered a bear market, right about there at the 3807.5, and we're going to get down below this probably coming up here real soon, going into next week, is most likely. But I'll get into that later in the video, okay? So anyway, number one, which direction is a long-term market? What's it doing? Well, it's going down. So that's the first thing I'm looking at. The second thing I'm looking at is these cycles. What are these things? A lot of you already know me. You already know that I follow cycle analysis. What are these half arc moon looking things? Well, these are cycles, and they are part of what's called cycle analysis. Now, I'm not going to dive into the depths of cycle analysis because it is a very in-depth subject matter, but I'll keep it super simple. Wherever you see these two arcs come together, like right here, normally is where we would see price decline. Okay, So let's follow along. This was way back here in December of 2021, right? This one was approximately somewhere in January, right here. Price decline. Okay. This one, which price came up like that, like this, like that, like that. That's right there. That one was kind of the early part of March of this year. And the next one is here, which might be hard to see, but there's a candlestick here with a lower wick, like right there. That's that one. Okay. Yeah, the low is here, and we'll talk about whether or not this current cycle is going to change. For now, we'll keep it this way. So we're expecting a low right around there. Okay, and it's obviously heading that way. And what was the date for that low? January 22nd, which is a few days after, for those that don't know, quad witching. I don't really like using that terminology, but since everybody knows triple and quad witching, that's what we're going to go with. And what is that? Well, basically, that's when a lot of options and other types of contracts expire, okay? And that's really important. It tends to drive the market down. Quarterly options and all kinds of other different types of contracts expire here, okay? And that happens every 3 months. So in any case, this cycle low happens to match up pretty close to the expiration, the quarterly expiration. So that's another big influence on the market. But even if it wasn't quad witching, we would still have the cycle low here, and we would still potentially trade down into this cycle low, okay? So that's number two. Number one was the overall trend was going down, so I take that into consideration. Number two was I'm looking at cycles. Where are they falling? Where are they coming down into? Okay. All right. Number three, I'm looking at some indicators. There's a lot more to cycle analysis that I'm not going to get into right now. Things called translation. Okay, it's you need to spend some time. You can go watch Steve Miller's videos or Ask Slim. Okay, he's got some really good videos on cycle analysis. Okay, but next, what I do is I look at some indicators. I got the MACD here, really one of the granddaddy of all technical indicators. At the time I was talking to my members, I think we were right here, or we might have been right there, one of those two candlesticks, okay? And the MACD was looking like it was beginning to pinch down. And I could see here, obviously, this is my own indicator called the Big Daddy forecast, and yeah, it helps forecast the market. Okay, it was going down. Obviously, the SMI, also known as the Stochastic Momentum Index, was already also going down. So there were a lot of things pointing down. We got an end of a cycle coming. We've got two indicators pointing down. We got the MACD beginning to look like it wants to cross over, but back then it was like right about there, I guess. So it wasn't really super clear that it was going to yet. All right. So I'm looking at these indicators, and I'm just looking without getting into any numbers or anything else. I'm just looking at the nature and the direction of these indicators from here. And at that time, they were about right here. Okay. Well, clearly the peak is over here, and this is lower, right? We're heading that way. Same thing here. We're heading that way. The pricing was already beginning to decline into those one or two candlesticks, right? So all of that's saying down, not up, down. Look at all this consolidation up here. It just dragged on for like a week and a half. Okay. The other thing I'm looking at, so that's the third thing. One was the overall market was going this way. Two was the cycles themselves. I hope you're taking notes. And people get lazy. They watch the video. They want to say they want to learn, but they don't really want to learn. They don't take notes. I lie to you right now, I'm not taking notes. I know you're not. Because that's the majority of people. They say they want to learn, but they want everything handed to them on a platter. Here, take it. Here's the ice cream and the gravy. Wrong attitude. So anyway, that's one is down. Two is the cycles themselves. Okay, and three is the indicators. Okay, as I'm looking at these indicators, I also have some of my own logic behind these indicators, and one of them is these dots. And what are those? Those are called divergence warning dots. If they come up, that means that this indicator is diverging from the price. Okay, so price is going either sideways or up, but the indicator was going down. Both of these were doing that. Okay, that's called divergence. When we get it on both these indicators, especially on the Big Daddy, my own custom indicator, and on the SMI at the same time, because you can see in the Big Daddy, it doesn't happen very often, right? It only happens once in a while. See that? So when it happens on both these indicators at the same time, that's a pretty good indication that prices are going to go down. Divergence means prices are going to go down. Okay? All right. Now, for most of you that have been following me for quite a while, this all kind of standard stuff. This is what I do. This is exactly some of the things I look at to help me make decisions about making trades. Now, I've been working my day job for months. As you all know, crude oil has been absolutely, well, some of you may know, crude oil, which is a commodity, or you can think of it as a futures, but it's known as a commodity, is very expensive. As you all know, gasoline prices $5, $6, $7 a gallon, depending on where you're at in the world. Okay, here in Texas, they're about $4.50, $4.75, whatever, $4.80. Okay, but the price of crude oil per barrel, I think, is like $120. I didn't look lately, but somewhere around there. Okay, so my day job is I'm writing software for the oil industry. Okay, I won't dive too deep into it because I can't, because it's very hush hush and private. Okay, but the reason I'm mentioning that is because I don't get to trade that often. Okay, lately I've just been acquiring fixed income, meaning a lot of corporate bonds, some government I bonds as well, because they're at a really good percentage. They're paying a really good interest rate right now, and corporate bonds. Okay, corporate bonds. Okay, so I've been acquiring fixed income because I'm too busy in my day job to do any trading. So these are the two that I've been just acquiring and doing my thing and picking up some interest on my money rather than just sitting there idle. Okay, so anyway, but I spent some time last weekend, I think it was, or 2 weekends ago, working on some data for the members, okay, that I wanted to do for a long time, and I finally just, hunkered down, so to speak, and finished it and got it in a decent place. And we're going to look at that right now. It's called certainty. I just called it the certainty rate. I don't really like the name, to be honest. It's just what I called it, the certainty rate. Okay, and why did I call it that? Because I knew by looking at the data after I had gathered the data and kind of looked at it for a while that it was making me be more certain about my trading. Okay. Now I've got members, so the general public that's watching this video, hang with me and I'll discuss the certainty rate in addition to everything else I already talked about. Okay. I know I've said a lot of things in this video already, so a lot of you are probably scratching your heads. Okay. When this video is done, you can pause it or even now go back and listen. Okay. And do your due diligence. Because everything you're hearing here today is help me to earn $1,500 in a single trade on 3 little e-micro contracts in less than 24 hours. Okay, no, it's not going to happen every day. Okay, this was an obvious setup that I had a really good sense that was coming. Okay, based on everything I've told you so far and this certainty rate. Okay, so for the members and for future members who might become members after watching this video, I'm going to talk about the certainty rate. I'm going to help you get a better understanding about this because I know there's been some questions from members about what the heck is that and how do you use it. Okay, so give me a second and we're going to flip over and just look at the data. It's just raw data. So what is this thing? I've already talked to members about this and some other people, I think, in a video I did for the public last week. Okay, but let's talk about this. I'm talking to the members right now specifically because they're the ones that get this data. Whenever there's new data that's relevant, I send it out to the members. Okay, they're on an email list and they get this data. Okay, they get this chart right here. This is 2022. Okay, you can ignore this one at the bottom for now. Okay, this is the application I wrote. Yes, I write software. This is just a badly, an ugly looking desktop app that I threw together with some buttons, some text boxes that goes and does stuff. Okay, you can ignore the aesthetics of the app. Okay, it's just meat and potatoes, buttons and stuff to go do some stuff I needed to do. Okay, but basically what ends up happening, what's all said and done, is the data gets loaded into this chart at the top here. Okay, it's got 3 columns. It's got a date, it's got a rate, it's got a ratio. For now, we're going to ignore the ratio and we'll ignore this bottom one here. We're just looking at this top one. Okay, and the only one we're interested in is on this top one is going to be the date and the rate. Just these two. Okay. Now some members have said, well, what the heck does the number mean? you know, and the number doesn't coincide with anything on the chart, you know, and there's some assumptions being made and whatnot. That's my fault because you know what? I just threw this together, okay? And this thing this thing is still maturing. It's kind of like a wine, okay? It takes time for it to mature. I don't even have necessarily all the exact answers on how I use this data. Okay, I have a pretty good idea on how to use it because I'm going to talk about how I used it yesterday with this particular row right here. Okay, 6-9, which was yesterday. Today's 6-10, right? Today's 6-10 as I do this video, right? You can see right there it says 6-10 up there. See that? So that's Friday 6-10, and this date was Thursday 6-9. This is data that came in Thursday night. Okay. So I use this data to help make the trade. But before I talk specifically about the trade, which I'm going to do at the end of the video, so hang around for that. But first, let me just talk about the certainty rate and how do we use it, okay? So what if I told you that this data in this top grid here, what if I didn't show you members this data at all? And all I said to you was, I have this thing. I'm not going to tell anybody what it is, but I'm just going to every day, or there may be days, because obviously you can see these dates. It isn't every day, right? You know, sometimes it comes in fast and furious over a few days. Sometimes it jumps. See how it went from May 25th all the way to June 9th? And there was no significant data between those two dates. Okay? So it doesn't necessarily, not every day, data comes in every day, but not every day it's significant. Okay, that's number one. Okay. But what if I told you, I didn't show you any numbers at all, no dates, no numbers, and all I said to you guys, you members, was there's going to be a change in the direction of pricing in the S&P 500 specifically. Well, that's all I said to you. I didn't say anything else. And I left it up to you to decide what to do. Just think about that for a second. If all I said was, I've got some data that I'm not showing you guys on the screen like I'm showing you now. I'm just telling you in my videos, or I might tell you on the Discord server. By the way, for those that are thinking about the membership, yes, there's a Discord server. You can join the rest of the community. And, you know, some of us are chummy and pally and we talk, and, you know, some of it's trading, some of it's just other stuff, okay? There's multiple channels on there. There's solar channel on there. There's some other channels on there, okay? Fixed income channels on there. All right, so, but what if I didn't show you any data and I just said there's going to be a change in the direction that the market's going in? That's really what this data is. What does that mean, change of direction? That means, look, let's start here at the low. Let me just zoom in a little bit, see if I can get this to be a little bit bigger. There we go. What if we were down here, which was, let's just pretend today is May 20th. That's that candlestick right there, right where the low was. Well, let's say today was there. And let's say that I didn't show anybody any data about any certainty rates, and all I said to my members was there's going to be a change in direction. Maybe I would say it over here on this day, or even the day before. Or it might be over here. It doesn't really matter. It's like somewhere in this area. It might be on the very day that we hit the low. And I said there's going to be a change in direction. And then lo and behold, we start getting a change in direction, and it starts going this way. Okay? And it happens a day or 2 or 3 days later. So I want you to think of the certainty rate like that. That's all it is. It isn't anything else. All it's telling us is there's going to be a change in direction of price action. You know, I had one member that was kind of going, we were kind of talking back and forth, and that's cool. I don't mind the questions. Okay? We were talking back and forth, and they were like, well, it didn't, the trend didn't change. And I began to realize, well, maybe trend was the wrong word. Maybe I shouldn't use the word trend. Okay? So I'm not going to use trend anymore when it comes to the certainty rate. So nix that. Okay? I'm going to change the jargon. Okay? And I'm just going to say now that when a certainty rate comes out that's significant, it means there's going to be a change of direction. Okay? Change of direction of the S&P 500. That may or may not qualify as a trend change because, you know, some people define trend a little bit different than others, and that's fine. Okay? But it means there's a change of direction. So if we're down here and I say there's a change of direction, okay, if we've been going down, then we can expect it to probably start going up, right? So if I don't say anything else and I just tell my members change of direction, guys, I got data that tells me there's a change of direction in the price action of the S&P 500. And that's all I say. I don't say anything else. Okay. Of course, you know I'm still going to add to the service for the members and talk about the direction I think it's going to go into. But let's just pretend for like a second I didn't say anything else. Then it would be up to you to come to things like the MACD and look at what's going on. Well, oh my gosh, what do you know? The market's going down, right? The MACD's pointing down. There's huge gaps in the MACD, right? You follow me? Look at this indicator. It's worthless. It's not telling you anything. It's just chopping sideways. Same thing with the Big Daddy. Because these are fast reacting indicators. But the MACD, at least with these settings of 20 these settings of 12, 26, and 9. Okay, everybody can get the MACD. That's like a very common indicator. Okay, with these settings 12, 26, and 9. Okay, it's slow reacting. Okay, remember we're talking about daily chart here, not hourly, not 1 minute, not 5 minute. Okay. So it would be up to you if I said there's change of direction using the certainty rate for you to come and look at something like the MACD and other indicators, okay, and cycle analysis and everything else I mentioned earlier in this video. Hint, hint, pause, go back and listen to it again, okay. But you'd be looking at these other indicators to help you. Well, if this guy and his $5.99 service, which by the way, I don't get that much. Google rips me off. I think I get about $3. No lie. They take like almost half. Thieves. Anyway, so if I said that with this $5.99 service, that there's change of direction coming in the price, and you saw this going on in the MACD, then isn't it? It should be kind of obvious that, you know, as this thing's beginning to pinch down, it's probably going to go up, right? But I'm not going to make that decision for you because I only give opinion. I don't give financial advice. Okay, but yes, I do speak to my members on the Discord server and on private member videos, and I give my opinion about where I think things are headed. Okay, but as a trader, you still have to make that decision for yourself. Everybody does. Even this $1,500 trade, profitable trade that I'm going to show you here in a little bit, I still had to pull the trigger. I'm the one that had to do it, just like everybody else. No one's going to do it for you, right? Okay, so that's what. Let's go back to the certainty rate data. So forget the numbers, guys. Forget it. Because I can tell it's confusing some people. Forget the numbers. Forget it. Just know that if I send you a date that has a certainty rate, there's going to be a degree of confidence that the market is going to have a change of direction. And you're going to use that knowledge that this certainty rate is telling us it's a change of direction. You're going to use it in conjunction in a holistic or synergistic fashion with your other indicators to help you decide, well, which direction is it going to change to. Make sense? Everybody follow me? If you didn't get that, pause, go back, listen to it again 50 times if you have to. Okay? So use the certainty rate, which is just telling you change of direction. Okay? It doesn't tell you which direction. It doesn't tell you if it's up or down. It just says there's going to be a direction change, not which way. It doesn't even tell you how much. It doesn't even give you the exact when. And I can just hear people saying, then what good is it? If the only thing it can tell you is change of direction, then that's a piece of garbage. That thing is worthless. Well, it's not worthless because it made me $1,500. Okay, is that enough worth for you? It's not worthless. You know, we can come to some conclusions that when we get that certainty rate, historically speaking, the change of direction tends to happen, you know, within a few days at the most, and sometimes right away the next day. Okay. All right. So that's what the certainty rate does. It tells us about change of direction, doesn't tell us which direction, and doesn't tell us how much. It doesn't even tell us exactly when. It's just telling us it's going to be soon. Okay? And yes, it's very powerful because I just used it. All right. So I know the video is getting long already, but that was a chock full of information that you can use to make trades, to make a lot of money. Now, let's switch over and I'm going to show the actual trade. Okay, so bear with me on this. And I'm going to talk about how I set this trade up and how I used everything I just talked about, okay? So hold on. Okay, so here we are, and you can see that, I made $1,500, right? This was 3 contracts I shorted. I know it says +3, but this is after the position was closed, okay? There's a $1,500 profit. It was on the E-micro S&P 500 September contracts. These are futures. You can see the date up there was June 10th, okay? And this is me after I close it. The green means that I covered the contracts, the 3 future contracts. That's why you see a green. Okay, it would be red and have a -3 over here somewhere. I think right here would be -3 when I took the position. Okay. Right. So let's look at some of the details about the trade. Okay, so here we are on the ledger. Okay. And you can see that look at this line right here. This was June 9th. Okay, I took a trade. I sold one negative. Okay, that means that I shorted it, right? -1. I shorted this. I shorted the E-micros. Let me get yellow because yellow is going to be a little better here. I shorted the E-micros. It was at that price, $4,019.50. There's some commission over here. Whatever, it doesn't matter. Okay. And that was at about 5:30 my time. Okay, and then on the same day, 6/9, about an hour, 2 hours later, let's say, right there on that one, I did it again. And look, the price had gone down. And that's the whole point of shorting, right? As price is going down, I'm getting a sense that price is going down. I'm like, okay, I'm gaining confidence that the market's going down. In the previous part of this video, all that technical talk and jargon I was talking about had already given me the confidence to trade short. So I wasn't nervous. I wasn't sitting there going, oh my gosh, should I do it? No. I had high confidence that this was going to be fine. Okay. And then about not quite 2 hours later, I did it again. I sold another one. And look, the price was down again. Okay. Okay, so that was all Thursday night from 5:30 till about 9:15. Okay. So over a 3 or 4 hour period there, I was watching the market and nibbling on contracts and, slowly building my position and just getting a feel for what was going on, okay? And then the next day in the morning at 9 o'clock in the morning, you can see it right there, 9:05. Right here's June 10th, which was today, Friday. Same day I'm doing this video. In the morning right there, what did I do? BOT means bought. It says +3. So there's the -1, 2, 3, and the +3 covers those 3. Everybody get it? And look what I covered it at, $3,019.25. I paid a little bit of fee and commission, whatever. And look, there's the $1,503.75 for the profit. It's a positive number, not negative. Okay? Right, so that's kind of the dirty details, if you will, the nut and bolts of the actual trade. It doesn't matter. This stuff is not really that relevant. This here is just pushing some buttons and getting the position built and then turn around and closing the position the next day. What you guys really want to know is, and what you should do is, this position is small, by the way, for me. Okay, 3 contracts, I kept it small. Okay, small. -3 is small. Each of these contracts is about $1,500 of leverage required on my margin account. Okay, you do the math. That's about whatever. 1, 2, 3, $4,500. Okay, that means I have to have either assets or cash or something up and above and beyond in the account to take this short position. Otherwise, I'd get a margin call. You follow me? So this is considered small for me. I kept it small, really small, and I still made $1,500. And I've said that it's been a while since I talked about this, but for everybody out there who's watching this in the general public, and even for members who are trying to figure out how to trade, because you're obviously taking the membership for a reason, right? Well, the big reason is because it's dirt cheap, but also you're trying to learn and trying to be a better trader, right? Think about it. I took a tiny little 3-position contract. For me, on my account, that's very small. And I kept it small for a reason. It's called, and I talked to one of the members recently about this, and I'm not going to beat him over the head with it because, whatever, everybody's a little bit different. That's called risk management. And I strongly recommend that you do small positions. So you're not stressed. Stress-free trading, man. Super small position here. I've traded 20 contracts before. Which at that point, I'd probably go over to the big contracts, the ES, and trade, just 2 contracts instead of 20. Because the E micro is 10 times, 1/10 the size. Anyway, I won't get into it. The point being that this is considered a small position for me on my account, okay? And you should do the same. Now, I'm going to say something that a lot of you traders are not going to admit to, even my members. You're an all-in kind of person, aren't you? It's so common. So common. I'm all in. I'm an all-in trader. I go all in, baby. Go big or go home. Wrong. You have bad risk management going all in. Horrible. And that's why you probably lose a lot of money, or you're what I call a hit and miss trader. Some good trades, some bad. Okay? Don't do that. This position is super small. I didn't do the math, but it's less than 10% of my account. Less. Okay? So, be smart. Keep your position small. I need to make a lot of money. I need to be a millionaire by tomorrow. Wrong. Think about it. What if you made $200 every month, and that's all you did for this entire year, times 12 months? You do the math. It's pretty simple, right? $2,400. What if that's all you did for the year? Would you be happy? Is $200 a month good? For some people, that's great. What did you do last year? Were you in the hole at the end of the year during tax season, or were you above? If you're in the hole, you got bad risk management. If you're barely above ground, like just barely above, you probably still got bad risk management. If you're doing really great and you're way above, great. I don't need to say anything else. You got great risk management. You don't need me to tell you a thing. Just keep doing what you're doing. Okay? But this is where you need to be honest, because nobody else is checking on you. You go look in the mirror and be honest with yourself. Keep your position small. Proper risk management is 2 primary things. Small positions is a good place to start. And that's where I'd keep it for a long time until you're consistently profitable. And number 2, for crying out loud, use a trailing stop. Trailing stop. Don't leave positions hanging overnight while you're in bed. Trail stop those suckers. Okay? You know why you want to do small positions with trail stop? Because when you have a small position, you can have a much larger trail. If you're leveraging up your account and using almost all of your account, you got no wiggle room. None. And you're going to stop out right away and lose money and be mad. Oh, I'm always losing money. That's because you're taking too big of a position. Stop doing that nonsense. Okay, that's the real anatomy of the trade, not this detail stuff here. Okay, the real anatomy of the trade was early in this video, how I used everything to have confidence about the trade. So go back and review it. And 2, small positions with a big trail or a fairly decent trail. You have to figure that out for yourself. How much trail do you want? Okay. But as soon as that position goes decently profitable, you must have your trail stop in place. Then you can go to sleep like a baby. Rest with no worries because you know you're making money. And if it stops out, big deal. You know what, guys and gals? I'm going to be honest with you. If I had made $100 instead of that $1,500, I'd still be happy. That's the point. Just be happy that you're profitable. Move on to the next trade. Stop stressing yourself out about how big it is. Okay? And the other thing that's very common with traders, I see it all the time. I know because I used to do all the stuff that I talked about, bad risk management, and I used to always be concerned about, I could have made more. I missed the more. I could have made more. I could have. Just stop the nonsense, man. Be happy with the $100. Move on to the next trade. Stop trying to make up for bad trades. Become a great trader. Not, I need to make up for it trader. Big difference. All right? Okay, so let's finish up with Where do I think things are going for next week? Today's Friday. What's going to happen next week? Well, overall, I think we're still going to go down. Let me get a good color here. I got black going on. I think we're still going down. Okay, I can't say exactly how far down. Okay, but the reason I say it is because this hasn't crossed over yet. Now, we may get a bounce, like you might get some stuff like this. The short-term indicators may do, but they might just come down here and flounder around for a while. Okay? But I think there's more price decline to come. I'm pretty sure of it. All right, so down this date right here is June 22nd. Next Friday is the quad witching expiration. So there may be price like halfway up this candlestick, like that. Who knows what's going to do, but then back down. So whether we get a little bounce up into the next week, Monday, Tuesday, Wednesday, whatever, bouncy, it might bounce and fart around sideways. I don't know, whatever it's going to do. I think the week, for the most part, on the average, is going to be down as we go into quad witching, triple witching. I really hate that. I don't like that saying. It's just about options expiration mostly. A quarterly option, big event. That's why prices go down, okay? And the certainty rate came up with a big number. So as I finish up this video, for you members, how did I use the certainty rate? Well, exactly like I just said. Let's go back to the app one more time. So I talked about all this, right? I talked about the prices are overall going down. I'm looking at cycles that were coming to near the end of the cycle here, right? I looked at that. I looked at the MACD, that it was down in this area, getting kind of flat, like it was getting ready to go down. We had divergence warning and used all that. So how did I factor in the certainty rate on all this? What I did, just to be absolutely clear, is I saw that we didn't have anything since May 25th in this top chart up here. In this top grid, sorry. So when 6.9 came along and it was 12.8 and it was greater than my filter rate of 8, that's all I needed to know. The number doesn't mean anything. Okay, it does, but since I know that's confusing members, I'm just not going to talk about it right now. Okay, I'm going to keep this super simple. On June 9th, a number came in that was greater than 8. That was good enough for me. That's all. That's it. That's how simple it is. Something came in greater than 8, and I said, okay, that, with everything else I talked about, is more than enough confidence that I know with high certainty, get it, certainty rate, that the market's going to go down. Okay? That's it. That's all I did. Now, some people may say, well, look at these dates back here. You got 13, 14, 16, 17, all kind of in a row. That's right. There's a little bit of noise here. I'm not disputing that. There is some noise here. There's a lot of dates here. But guess what? It doesn't matter. Because I know that collectively, this is the holistic part that people are kind of missing. Okay, synergistically speaking, all these dates, if I go back and look at the chart from the 13th of May through the 18th, let's finish with that. Because now you know how I did the trade, right? I already told you. But let's look through 13 through 18. What was going on? 13 through 18. Well, here's 13 right there. It's literally one day after a low. Look how low this candlestick is. All the way down here. And then the certainty rate came in and said something's going to be a change. Well, for crying out loud, the MACD is still going down. It's got a gap in it. Right there is the day it came in. I'm looking at the MACD and I said, well, it's still going down. The certainty rate is predicting there's going to be a change. Remember, I'm not talking about trends anymore, just change of direction. And sure enough, it did. It went up for like 3 days there. Okay? And then you got some other dates there, like whatever, 15 and 16, whatever they are. Okay, what is this? 16, 17. And it said there was going to be a change too. So here's the deal. When that certainty rate came in on the 13th, which was right there, and I see it going up, if I wanted to be, that would be a big risky trade, by the way, because who the heck's going to trade up in this craziness going down? Okay, don't trade against the overall trend. Be smart. Trade with the big overall trend down. So I wouldn't trade these 3 little measly days up. I'm not doing it. Okay, I'm going to swing trade on the big events like the one I did here and made $1,500. Okay, but in any case, the 13th warned us that there was going to be a change of direction. It changed for 3 days. Then we got a warning on this day that it was going to change direction. It did. That day itself was absolutely huge. It went down. Okay, and there was one last one on the 25th. This candlestick right here. Right there. And by then, guys, look at this. The MACD has crossed over. Okay, you got all the confidence in the world that something's going to happen, and it's really high confidence that the something that's going to happen as a crossed over is this way. Okay? That's it. That's how you use the certainty rate with everything else. You look at it. You don't care about the number for now. You just know that a rate came in. It's higher than 8. Yeah, that 8 filter may change over time. Okay, like I said, this thing is maturing like a fine wine. And as I get better and better with it, I'll share it with everybody else, okay? But I can't really explain it any better than I did on how I use it to make that $1,500 trade, okay? It gave me confidence on top of everything else that I was already looking at in the charts, okay? That's what it did. And it's going to continue to do it, I guarantee it. Okay? And by the way, in case the members missed this, and for the general public, the certainty rate's got nothing to do with any market. Nothing to do with stock markets or futures or commodities or anything financial. It's completely unrelated. That data is paramount to a rock rolling down or falling off, off Mount Everest or something. How many rocks per day fall off Mount Everest? Some crazy, just unrelated data. Okay, I won't go into what the data is. Okay, but it's completely unrelated. Just think of it like that. It's mind-blowing. But yes, this data and the analysis of the data, I don't make up the data, I just pull the data and analyze it. And the analysis of the data shows that yes, it predicts S&P 500. I know it sounds crazy, but it's true. And I made $1,500 doing it. All right, so there you go, guys and gals. Long video, but it was worth doing it so you could, for both the general public, but especially for the members, that's how I use a certainty rate. So as we move forward, if I say there's going to be a change of direction, because the certainty rate is saying it, I want you to do your due diligence, use it as part of the confirmation in a synergistic or holistic way, and go at least look at your MACD and begin to learn cycle analysis, okay, if you aren't already. Okay, and use it with that to help you understand the direction and the timing, okay? And yes, I'll give my opinion about all that as well. All right, that's it. Hope you enjoyed the video. As I said before earlier in the video, if you haven't subscribed, subscribe to the YouTube channel. Give me a thumbs up. If you want to be a member, there's your join button below this video. If you're on a mobile device, it may not work. I don't make up the software, guys. YouTube and Google do. So if the join button's not working, go on your laptop or something, okay, or desktop. Okay, click the join button. If it still doesn't come up in the browser, disable your pop-ups. Okay, that's what I found out is going on with some people. If you've got pop-ups enabled, you're not allowing pop-ups, what I'm trying to say, then you won't see the pop-up and you won't be able to join. So make sure that you enable pop-ups, allow pop-ups, what I should have said. Okay, so allow the pop-ups temporarily. So you might have to go to Google or DuckDuckGo, which is what I use because I hate Google. Okay, type into your DuckDuckGo search engine and say, how do you enable pop-ups? Okay, and then pick it for your browser, or Google Chrome, whatever you're using. Okay, enable your pop-ups, then click the join button, and then you'll see it come up, okay? Yes, Google Pay, I think you can even use PayPal with Google Pay, okay? You pay the $5.99, however you want to pay, okay? And then if you want to join the Discord server, just leave a comment in one of the members' videos, and I'll make sure you get the link for the Discord server. You can join the Discord server, okay? And then you'll get all the cool stuff that you see here. All right, that's it. Wow, long-winded video. Hope you all enjoyed it. All right. God bless all of you. Love one another. Forgive one another. We'll talk to you all real soon again next time.